Today, I'm breaking down my income portfolio for November, every ETF, every dividend payment, and exactly how much this portfolio has grown, including the real cumulative value since day one. If you're building your own income stream, this update is packed with insights you can't miss. Welcome back to Simply Money, where we make investing simple, transparent, and real. Every month, I show you my actual income portfolio, the wins, the losses, and the cash flow it generates. Today's update includes total portfolio value, each fund's dividend payout, and the cumulative growth of this income strategy. Let's jump straight into the numbers. We'll start with the dividend breakdown, what each fund paid me this month, then move to total value, and finally, the cumulative growth of the entire portfolio. This is the part that really shows how powerful compounding income can be. So here we go. Okay, so looking at November 2025, we can see over here I put the date, and here I put the symbol of what was paid and the dividend amount. So we're keeping track each day of the week, each day of the month, how much I'm getting paid. And this is the fun part. If you look at this, November 3rd, 6th, sorry, a couple of these are backwards, the 5th, the 7th, the 7th, 10th. Every time I look at my bank account, my portfolio, I'm seeing you received a dividend, $49. You received a dividend, $96. And that's a really powerful, impactful thing when you're investing, seeing that you're not only growing your portfolio, but you're receiving these income streams on a regular basis. We can kind of look down the week by week. You can see that it did go down. November was a tough month. We had a lot of red days in November. You can see that impacted right here. If you look week to week, the first week, the payments were $803. The second week, it was $733. Then we're down to $673. You can see the fourth week was $657. We have a steady decline in the amount per week. This total for the fourth week was actually $2,092 if you add these three monthly payers in with the weekly payers for that week. I'm not concerned about that because this is in a downward trend. It's not going to keep going down. It's actually started climbing back up the last few days of the month. We did see a slight recovery in some of those. I'm hoping we'll see in December this starting to climb back up toward this range, and it may not. Maybe December will continue to be flat or maybe down, but it's long term. I'm not concerned about it. A lot of people get upset when they see this. This is part of it for me. If you're basing that you expect to get your highest payment constantly or constantly growing, then you're not in the right funds. You need something that's a more consistent, steady growth fund or consistent, steady dividend growth fund. And these funds aren't designed for that. There's going to be a lot of fluctuation in it, and we will watch that, and I'll show you as we see the cumulative here in a moment. But that's the week by week, day by day portfolio for November. We'll go over here to the cumulative, and you can see as we close out November, we have $3,453. I'm sorry, I'm going to go back here real quick. Meant to come down here. On this chart, it breaks it down per fund. The total for the month, QQQI for the month, $767. SCHPY, $585, Ulti, $1,200, and I know we got the reverse splits coming up here, so we're going to see what happens with Ulti and some of these others. IWMI, $80, WPAY, $500, CHPY, $600, SCHD, which is my quarterly payer. We didn't have any there. That'll pay next month, so we'll have that in December to look forward to. BLOX, we have $171, and YBTC, $356. So that's your breakdown of each fund for the month. This is your breakdown of each individual payment throughout the month. That's how we do that. On the cumulative, we just bring it over here so we can see month over month how it's growing. And you can see here as I began switching into more of the income-focused funds, taking some of the SCHD, rolling it into there. You can see that the quarterlies have been pretty consistently growing. We had March with SCHD in there. You have June with SCHD in there, but I also started making a little bit of change. Then you have September with SCHD in there, our highest payment yet of $61.03 for that month. Where you really see the difference is these in between the quarter payments where SCHD, which is a big holding that I have, pays quite significantly during these quarterly payments. It was the in between that we weren't seeing a lot of the monthly payment. And with SCHD, I'm not one I have to worry about it. I don't care. Some people are like, I need a paycheck every week. I need a paycheck every month. To me, it's what is my annual income going to be? I could get paid quarterly, monthly, weekly, or annually. It wouldn't matter to me. It's called budgeting for me. I put it aside. If I know what my budget is for the month, then I break that down each week. Doesn't matter to me when that comes in. But in the accumulation phase, this has been nice because you're seeing that growth. So this is where you start seeing in this in-between quarter payments how we started making the shift. It went up quite a bit here to 1,200. Then we went up to 3,076. October was 5,276. November is down quite a bit here because of some of the changes we made, continuing as we adjust some of that. And you can also see, if we go over here, October, Ulti paid $1,500, and in November it paid $1,200. So Ulti's payment is down $300 a month just in itself. The overall, I am very satisfied with that. If this is my lowest monthly payment for the year, and then I have these quarterly payments of $5,000 or $6,000, I'm very happy with that. We'll see what December holds, and then we're going to have all of next year to see what these in-between quarters, how they hold up, how they are different from 2025, where we made the change mid-year. We're going to be able to track that for the whole year and watch that. That's the dividend payments. That's each fund. It's month-to-month payment, and also seeing the cumulative and the shift that it's made there. Now we're going to go into this chart. We're going to start over here with SCHD. Obviously, there is nothing new added here, but I do want to recap this for those who are new on the channel. We've been tracking this since March 2017 when we bought into it. It was a rollover. There was a lot of funds put into that. This has the stock split adjusted. That's not what I paid for it, but it has split since then 4-to-1. So this is the adjusted price, what it would have been, just to make the chart easier to follow. It's the number of shares we bought, and that's the initial investment we made. You can see the dividend payment here was 10 cents. And I'm just going to skip down here to just show you the compounding effect of this. This is nothing added to it. This is just that money riding since March 2017. It is at 312. But you also have to look that there were these distributions made of 769 shares, 5,000 shares, and 246 shares that I used to shift into some of the other funds that we'll be looking at. If you look at prior to that, back in June, it was at 465. It's at 312 with that, which is fine because it's still a good solid position. And as you see in that other chart, it produces a nice quarterly payment. And we'll look forward to seeing what December is going to bring us. The last dividend payment was 26 cents. The one in June was 26 cents. Last December was 26.45. So we're hoping to see this up maybe around 27, 28 cents, maybe even 29 cents. We'll wait to see. What are your thoughts? Leave me a comment down below, those that are SCHD fans or followers. What do you think the December payment's going to be? Leave that in the comment below. Little predictions going on for SCHD. Now moving on, for some of our weekly payers, we have WPAY. As you can see, we started out with $2,639. We've made a lot of buys. This is one that I've been buying weekly, just adding $200 to each week. In addition to the drip, there's a lot of different movement going on here, but if you come down to the bottom, you can see right now, because of the rough month that we had gotten up to 13,000 here. The share price was up to 54.70. It's down to 46.69. I feel confident that's going to recover, and we'll see this fund do well. But for now, we're down $300. Not a big deal to me. You're looking at from September 16th until the end of November, we're down $300. That's a minimal drop for me. When you look at something, this is a short term. The dividend was 45 cents that it paid. Again, I'm fine with that. What are your thoughts on WPAY? Do you see this as an issue? Obviously, we had a lot of green going on in September, October, and it did really well. and we're continuing to buy into it. Instead of getting 4 shares with the $200, you can see each time I bought the $200, we got 4 shares. This last time I was able to get 5 shares. We had a few extra dollars in there and rounded it up to 5 shares. And then you add in the redistribution, the drip that's going on there, 2.5 shares added that week as well. We've gained 20 shares just from the drip. That's not counting what I've added to it. When I go with gain shares, I go with what I've gained through drip, not what I've bought in addition. The buys don't show up there. This only shows what has been paid through dividend drip. Thoughts on WPAY? Leave those down below. We have CHPY here. You can see that there was $9,751. There was an additional buy here, so it brought it up to $18,000. What's been happening with CHPY? Started out at $55.44. Right now, even in the red month that we had, we're at $54.89, so it is down slightly. It's down a little bit from its peak back in mid-October of $59. Again, this is one that's going to be volatile, but we will see that just like we do in all the other funds. They end up recovering. We'll see that and we'll watch that and monitor that. But since September 26th, you're looking at a gain of about $1,100. Nothing wrong with that. And we've been able to add 24 more shares through that drip that we're doing. I'm going to fly through some of these. But on each one, if you're a holder of these funds, so with CHPY, leave your comments down below. Are you happy with what you're seeing with that? Do you own it? Are you thinking about owning it? What do you think of these charts and what we're showing here? Do you see this as a positive or a negative? Even though it is down slightly from its peak a few weeks ago, it made a slight comeback here this last couple days, and it'll fluctuate. That's the stock market, up and down. If you're not ready for a little bit of a roller coaster, you probably shouldn't be investing. It's going to be a little bit choppy. If you're not able to handle the choppiness, go into more stable funds, less volatile funds. You won't see as much upside, but you won't see as much downside either. That can help stabilize it. Some people are so conservative, they only go with saving. I know people who are great savers, and they save far more than some people, but they have far less because they don't invest. They can't handle any volatility, so they throw it in savings accounts or CDs, where with the stock market, maybe you're not willing or able to take some risk, so you go into more conservative funds where you don't get the 10, 12, 15% returns. Maybe you're getting 6 or 7%, which is fine. It's still going to beat that CD and that high yield, which are now dropping again as the Fed lowers the rates. The stuff to think about: what is your risk tolerance as you're going through your investing profile and planning on what you're going to buy into? Now let's move over to IWMI. This is the Russell 1000 Small Caps ETF. I like this for some different exposure. Just a very small position in this, about $6,700. We've seen a little bit of movement. Now, this is a monthly payer. This is not a weekly payer. You can see it's up about $270. Again, it's only been a couple months. You're not going to see anything to give you a lot of confidence or fear, in my opinion, when you're only looking at a few months. But I like showing this as we continue showing this because, look here, we only have the original and then 2 months to go by, and we don't know what's going to happen. But if you look back at as we've done this with SCHD, look at what we've been able to track, and we've talked about this. And I'll show you again where we have times where, look here, we're up to 402, 411, but then now it's down to 356. Then it bounces back up to 446, 480. And that's part of that process of the up and down as you're watching it. In the longer term you'll see that growth take place, but you're going to, especially early on, you might go into the red initially. It's not like throwing it in the savings or CD where it's always green and it's going up at whatever set rate, 4% month over month over month. And it's just a stair step, 4%, 4%, 4%. With the stock market, you're going to have to realize that there's going to be ups and downs. You're going to gain 20%. You're going to lose 10%. You're going to gain 12%. You're going to lose 25%. But long term, 5, 10, 20 years, you're going to gain whatever that average is of those funds. If you can look at like the S&P 500, you're going to be gaining around 11, 12% with a good S&P 500 fund. And we did a video on SCHD. Check that out on the channel. And you can see a growth fund and how that has performed over a longer period of time and what that does. Let's move on here to YBTC. Now, those who know Bitcoin, all those have taken a big hit, but that's how they do. They have big drawdowns and then they catapult back up. Now, if you are holding those, it's a great time to dollar cost average into it. Yeah, there's a $3,000 loss on this. The dividend was $22.53 for the month. This past week, it got up to 30 cents. And we'll continue to watch that and see if that bounces back. Again, this is short term. We're watching it, monitoring it as we do with all our funds. There's a $3,000 loss there, and we're seeing the price from $45.30 right now at $31.88. And again, November was a rough month for a lot of funds, including this one here. We have BLOX. We were at $26.38. Now it's at $18.18. And we'll monitor this one as well. This one is down about $1,700. Again, those are funds. But as you notice here, we have some green, we have some red. We have a month where the S&P 500, the Dow Jones, the Russell 1000, they were all down, but our portfolio is showing some green and some red. And that's where diversification really helps out, because when you have some funds that are down, you have other funds that are carrying it, and vice versa. Being in different sectors and in different funds, that's why I like ETFs, because just one ETF, like SCHD, you're in a bunch of different companies and various sectors. SCHD, for those that watch my channel, know it's one of my favorites. We're in lots of different sectors with that. And so you're balancing up markets and down markets. Some funds are going to do really good in certain conditions, and other funds are not, but they balance each other so you don't see those huge drops. And that's what we're seeing here. Here, this fund is in the red, or we had other funds that are in the green. QQQI, we have that. We're looking at here a gain of about $41.81 since July in that. And you can see that the share price is actually up on that one, from $52.44 up to $54.01. It's down a little bit from where it had peaked, but not a lot. Again, another great performer there. Those monthlies, if you look at these funds that we're looking at, you have your super volatile, your BLOX, your YBTC. Then you have your pretty aggressive and volatile things like CHPY, WPAY, obviously Ulti. And we'll get into that experiment in a moment. And then you have less volatile, a little bit more conservative, but still pretty aggressive yields with SPYI and QQQI and IWMI, other funds that people hold that I used to hold, like JPQ. Those are great funds that are not as aggressive, but still give you a great yield and growth. And now we're going to look at SPYI. Again, on this one, we got a gain of about $3,400 since buying into that in July. We saw that, again, it's dropped a little bit from its peak, but we are up from when we bought it. And we're going to continue to do dollar cost average in here. We buy some periodically. I'll probably be buying some more in different funds from WPAY, which I'm putting that $200 a month in, a week. We're going to be stopping that and be doing some other stuff with that $200 a week. And we'll continue to see what happens with that. But SPYI, again, a nice solid fund. I'm real big on QQQI, SPYI, IWMI as monthly payers. Now, the fund everybody is talking about, good, bad, and a lot of ugly, is Ulti. You can see the experiment. Those who have watched it, we bought in 5,000 and we added in some here as different funds came available. A pretty big investment there of about $21,000. It's down about $2,800. Not horrible considering that the price. Now, this is as of November 26th. We're actually down to, I think, about $3.90 on this price right now. The thing, you can see the dividend was 5 cents. Here, just under 6 cents. Look at this as the part a lot of people are concerned about, the dividend payment. We'll start here after all the investments. 363 is where we're at. We're right in the 360, 350, 360, 370. Got up to 380. And then that's when the big drop started happening. Look at this, 280, 290, 275, our lowest weekly pay. Now you have to understand on this is 100% drip too. I'm not taking any of this distribution. It is all buying more shares. We've gained 1,182 shares We got a boatload of more shares from this because every time we get this distribution, we're buying 60, 70, almost 80 shares, but our value is dropped. They're going to do a reverse split. It's actually taken place. It should, by the time this video posts, it will have taken place and you'll see that. So this would be, say, $40, and we'll see how that pans out with some of the new underlying funds they have. We're going to be watching this close to see when we will say the experiment is over. I know a lot of people are like diehard Alti, others are like it's garbage, get rid of it, and others are in between. And we're doing this experiment. We are showing you each week, each month, what it does. You can see we got up to 22,565 was our highest. Last time I think we were in the green was right around here. Our investment is 21,657, is down to 18,825 right now. So we're going to be watching that. Let's go here to finalize this. This is our cumulative. This is what, based on current distributions, what we would be looking at from these different funds, the number of shares we currently hold, the price they're currently at, what the annual dividend would be based on its latest payments, what our monthly dividend would be, averaging 53.10. Yeah, remember SCHD pays $1,000 a month, but it's really paying $3,000 every quarter. So that's why this is higher than what you just saw on the other chart with the $3,000, what was $400. So that is what our monthly average would be based on the current distributions, which is providing us about a 12.23% yield, $63,000 off of that $521 in the income portfolio. And we have our growth portfolio that we don't touch. That's over there doing its thing, and that will be its growing machine, whether it needs to feed into this down the road or whatever we do with that when the time comes. So that is it for today. What is your favorite fund that you saw out of these? Is there one you want to see? Maybe I'll look at doing a little bit of different investments as we keep an eye on Alti. Maybe I'll take that WPAY $200 a week and start a new position without buying a lump sum, just dollar cost averaging. Or maybe I'll put that $200 a week into another one of these currently listed funds. Do you have a favorite amongst here? Do you have one that you're like, wait a minute, I want to see more on that? Share that in the comments below. I appreciate you joining me, and we'll see you next time on Simply Money.